Hello, God founded traders. Welcome to God founded YouTube channel where we keep things simple with just structure and liquidity. So, if you are new to the channel, my name is Edison, Victor Edison. My purpose of this channel is also for educational purpose to document my journey, my learning process, and my journey to mastery of forex trading. So, with this great opportunity, we are going to be doing a quick top-down analysis on the gold chart like always. So starting from the monthly time frame, and don't forget, if by the end of this video you find any value, do well to smash the like button and subscribe for more updates. So here on the H4 time frame, this is that level I marked on our last analysis on the H4 time frame. I spoke about this level of supply sitting here. The market might definitely react from there, and as you can see, that is exactly what is going on in the market at the moment. The markets have reacted at this level and dropped to the downside to grab more liquidity, happening exactly as I have explained. I also spoke about this imbalance here on the daily time frame on my last top-down analysis previous week, that the market will be coming down to fill this imbalance, and that we should wait for price to come back, fill the imbalance, and mitigate this unmitigated order block that is sitting here. And that is exactly what have happened. So that is it for the last week. This week, let's go ahead and see what we have going into next week, starting from the monthly time frame. So here on the monthly time frame, all I can see here is just a bullish momentum candle, though the monthly candle currently now is holding bullish. But don't forget that this current month have taken the high of the previous month, and the last month closed bullish, proving to us that the market is still bullish. All we're having now is might just be a retracement to the downside. So let's go down to see the bigger picture. Here on the H weekly time frame, what do we have? As you can see here, the market just swept the high and swept the low. What do you expect in this case? Since we are bullish and the market is have been having bullish momentum, that means since we are sweeping this low, in our analysis time frame, we should be looking for buys to the upside. So let's go ahead and see the daily time frame and start marking our structure. So looking at here in the daily time frame, it's still like what I've analyzed on my previous week top down analysis, which is simply the market breaking this internal structure after we swept this low as our inducement. After the market took out this level as our liquidity, the market started to make higher highs to the upside, creating an inducement at this level. If you don't know how to mark a valid inducement, it's simply a candle low, having a candle come back to take out the previous candle low in a buy side or in a sell side for inducement to be for a valid pullback or inducement to be created. The market will take out the high of the candle and break structure to the downside. This is for the bullish, which is when the market is moving to the upside. The market should take out the low of the previous candle and continue to the upside. for us to have a bullish pullback, which is our inducement. And for the sell side, this is what it looks like, which I can see bearish example. So let me check the H4 time frame before we continue. So here's how what an inducement looks like. Let's use this. Though at this level we didn't take out the inducement, so it's simply this candle going up to take out the previous candle high and creating the inducement. So when after we have this drop, we now have an inducement at this level. I wish I can see more better example. Let's use this. This is a complete one. The market is pushing to the upside. If you look here, the last after this strong bearish candle, this bullish candle and this bearish candle low are equal. So with this now, it means that we have a valid inducement at this level. Why? Because the candle low are equal, which means the power of this bearish candle and the power of this bullish candle are equal. So when the market pushed up and dropped, we now have an inducement because it took out the high of this bullish candle, pushed up and dropped. Another one is this one, the one at the up. So the bearish candle was taken out by the bullish candle. The high of the bearish candle was taken out by a bullish candle at the market drop. So right now, marking this level, we mark this as our inducement and wait for the market to come back and take out this inducement, and we'll be looking for our buy to the down, sell to the downside. The same thing at this level here. So that's how we mark our inducement and liquidity in the SMC strategy. So let's use this now to do our top-down analysis, starting from the daily time frame. What do we have? So here in the daily time frame, as I said already, we have this break of structure and market traded back down and took out this inducement here and drop, filling this imbalance. As we can see, after this liquidity candle dropped to take out this inducement and fill this imbalance, there haven't been another strong bearish momentum, which is a sign of weakness to the sell side. And for this, at this level now, we are going to be looking for entries in our lower time frame. So let's go down to the H4 to see what we have for our time frame. So this is what we have. This is the level I spoke about on my previous video. At this level, my gold price to the downside is OB here, this other block. That is exactly what happened in my previous week. And now the market shall come back down to clear some liquidity. And also remember, I spoke that this level is not a valid pullback because the bearish candle didn't take out the high of the strong bullish candle. Simply means that this bearish candle and the bullish candle are equal lows. So we can mark this as our invalid inducement. If this were to be our valid inducement, that means after the market took out this level on our previous week price action, we would have been marking this high as a break of structure. But because this is not a valid inducement, it is not a valid break of structure. So the market created this inducement here, and this was the only inducement we have, and the market now have come back down to take out this inducement. Don't be deceived here, because in the MT5 app I noticed that this price action is different, but looking at it with market structure and remembering that everything that is happening here is still internal structure, structure within structure. The market just came back down to sweep this low. This was a main low here. After the market took out this inducement and break structure here, and the market continued pushing to the upside, and the market came back down, swept this low, took out the liquidity here, and start to make a move to the upside. So remember, these movements here are still internal structures. Don't be deceived here. Don't start to see this as a break of structure. Whenever anything happens here, it's still internal structures until we break this low again or break this high again. This will not be our continuation to the upside. So whatever that happens here, this might be a manipulation or liquidity grab. So with this in mind, we have this as our inducement level. And I remember speaking that the market might come back, take out this inducement and sweep the inducement and continue to the upside, or come back down to take out the entire pullback before continuation, which looks something like this. The market going to the upside, come back down, push it down again, and come back, go up, come back. So now taking out the major inducement, which is this one that is here, we are now expecting the market to continue up from this level. From this POI, I was still marked out on my previous top-down analysis video. If you want to see more of my previous week analysis, you can watch out that video for more clear understanding and to see our last week analysis on gold. So here now, what do we expect? All I'm expecting here going into next week is to see the market continue pushing to the upside, because the market now have returned to this level, and immediately this momentum candle, bearish candle, tapped into this zone. The market have failed to have another bearish candle to the downside. Instead, the next candle swept the low of the bearish momentum candle, and other candles have never taken out the lows. All we have been having here is, before the market closed, if you look, you can see that we are pushing and heading to the upside. So with this in mind, all I'm looking for here is a continuation buy to the upside. Gold price action going into next week is a lot more clear than it have always been. So don't complicate it. Always keep it simple with structure and liquidity, following your trading plan. Don't force anything. So with this in mind, looking at it from the H1 perspective, what we have? In the H1 perspective, all I can see here is the market coming back to take out this trend line liquidity I spoke about on my previous week analysis. I spoke of this trend line, that this is our inducement. I also spoke about this inducement. The market might come back down, take out this inducement here, and mitigate this order flow, and we start to see a continuation move to the upside. But if that didn't happen, we should expect the market to come back exactly as it did to this trend line, clear this trend line liquidity, mitigate this level where price is currently sitting at now, before we start seeing a move to the upside. So let me highlight this as a trend line. So that is exactly what is happening now. And I also refine this level. So this other block here is holding in balance. So that is exactly what my analysis looks like. And now the markets have done exactly that. So now, if you look here, you can see that after we tapped in that zone, we start to have break of structures to the upside from this level to this level to this level. So finally, the market dropped to the downside to take out some liquidity. And what do you see here? At first, the market took out this major inducement. I spoke about this major inducement several times in my videos. If you don't know what it is, it's simply what I've analyzed previously on H4. I want to keep this video straightforward. On top-down analysis, a major inducement is simply something like this. The market going to the upside, we start from the beginning of the move. So the market pushing to the upside, drop, go up, drop again, go up again, drop, going to the upside, drop, and go up again. So when we have something like this, let me analyze. When you have something like this, at this level, at first, this is the pullback, and this was our inducement at the first place. The market go up, break this one, creating another inducement here, and break this high again, come back down and create this inducement, going to the upside, fail to break this high, and create another inducement here. So when we have something like this, since this swing now going to the upside, created these two inducements, not like this one. This one broke the high before creating this inducement. But this one, you can see after we broke this high here, the market failed to break this high and create another inducement. So that means that going to the upside, this is a single leg to the upside. So every internal low here should be marked as minor inducement, which is this one I'm pointing at. This current one is now our minor inducement. This is how it looks. I want you to understand this. This is major inducement. Major inducement. This is another one. Minor inducement, sorry. Minor inducement. Minor. And this is our major. At the moment, this is our major. Major. So this is what we have. Our major. At first, this was our major inducement. The market go up again, create this one. But at this current level now, where the price is, this is our minor, because going to the upside, we have not broken this high before creating this inducement. I wish this high was able to take out this high like this, then this would have been our major. If this happened as it did here, let's say the market come back, was able to break this high before creating this low here, this and breaking this high as it did, which is something like this, then this that is standing as our minor would have been our major. But since it didn't happen that way, that is why we're marking it as our minor, because it happened inside the move to the upside. So that is how we mark our major and minor inducement. If you don't understand it, I would like you to rewatch this video, because this is very helpful. Liquidity, inducement, trendline liquidity, that is what moves the market. As you can see in all my analysis, that is exactly what I've been using. There's no magic behind it anymore. Once you can learn strategy, liquidity, and if you can learn liquidity and structure, you are already good. You are good to go. In most cases, that is the most important thing about trading. So now let's continue. Let's see what we have going into next week on the H1 chart. So here on the H1, this level was our major inducement after we made this change of character here. CH. So after we made this change of character, this level stands as our inducement, and the market came back down. Instead of taking out the minor inducement, it come back down and swept the major inducement, which is this one I'm pointing at. And after sweeping the major inducement, the market tried to push to the upside and failed, and dropped to the downside, clearing the entire liquidity, which now this is the extreme, the last internal low that should be taken out before the continuation move to the upside. And as you can see here, the market also showing a sign of continuation to the upside, swept this low here and start making moves to the upside. And after we took out this last internal low that is sitting here, the market made another change of character here. This is on H1 time frame, another change of character. At first, we were expecting the market to tap on this wick, this shadow. Let's see. The market didn't tap on the shadow, which standing as our extreme POY. The market did tap on the shadow and gave us another change of character here. And after the change of character, all we can have here is our inducement. Inducement. And after this inducement is being taken during the weekend before the market close, what we can see is the market making higher highs to the upside, giving us a break of structure. As simple as that. So that's what we have on the gold 1 hour time frame. So the overall trend here going into next week, we should expect continuation to the upside. So at this moment, what we have, for me now, looking at it in this H1 as well, this is an inducement, and this is this shadow here should be my inducement, or my POI. So if the market should come back here, I'll be looking for my buy to the upside. So that is what I have going into next week. And from this now, lastly, before we call it an end, let's check the 15 minutes to know what we have. On the 15-minute time frame, all we can see is that our higher time frame POI has been mitigated. And since our higher time frame POI is mitigated, this is our First high broken, our change of character, and the market took out inducements here. Took out this inducement and mitigate this order flow and give us another break of structure to the upside. Coming back down again, we expect to see a continuation to the upside after the market took out this inducement. But what do we see? The market come back down and try to go up after taking this inducement here. After taking this inducement, you can see here the market tried to go up to continue to the upside, but failed and dropped to the downside. Someone might have marked this as a change of character. Someone might have marked this as a change of character, which indeed you are right if you mark it as a change of character. CH, this is exactly a change of character. But remember, when the higher time frame is bullish, the only thing you can confirm as a change of character is when the market takes out this low. After we tap in a POI, is until the market takes out this low, this is when we'll be calling seeing anything as our change of character. But if these low internal lows here have been taken out, be careful not to be a trap, because most of the time it happens as a liquidity being taken out in the higher time frame and the market will continue to the upside, which is exactly what is going on here. And also, the way I analyzed this before the market closed, looking at it, I saw a trend line here. This is a trend line for me. And seeing this, I know that definitely the market is going to come back down and clear this trend line. So I marked out this level here. I marked out this other block. I marked out this other block here and waited for the market to tap on it. And when the market mitigate this other block, I during the evening on Thursday, I think, during evening on Thursday, that's when I start to see this trend price action here. But to be honest, I didn't take this trade, but this is exactly my price action. But I don't want to be taking trade while being sleepless throughout the night, looking at the chart to know what the chart is doing. So I decided to sacrifice the trade, not to take the trade. So that is exactly how we traded. But coming back to the Friday as well, I see another price action here, which for me, the way I trade, I only have one way to trade this. One, once the market tap in this other block, after clearing this trend line, I want to see a bullish candle, a candle being engulfed in a bullish side, which is exactly what happened here at this level. After this bearish indecision candle, the next candle engulfed. So that is when I'll be taking my trade. As I said, I saw this setup, but I didn't take the trade. So also here, we still have another price action on the Friday before market close. But like I said, if I'm to be taking this trade, this would have been my entry and this will be my stop loss and my target will be above. So that is why I didn't pay much attention to this price action that is happening here, because there is always a probability of these lows being manipulated. So seeing this, when I'm supposed to be taking this trade is when the market gave me this sweep. This is a signal that the market wants to go up, continue to the upside, and giving me this change of character. I even called this setup out for my brother. Me, I'm not ready to trade on Friday. just want to cool off. So I called this trade out for my brother, and he was doubting the setup, so I let him be. So I don't know whether he later took the trade or not. But this is how I would have been taking this entry. So taking it at this pullback here, after you have this change of character, coming back to this order flow, I will take my entry and put my stop loss here. Because now I have a sign that the market is going to the upside. And I would have made, let's say we have 1 to 2 before the market closed. So that would have been my entry on Friday, but I didn't take this entry. So going into next week, to cut the long story short, this is what I'm expecting. Here I have my major inducement. At first, this is my minor, as I already explained, low inside a low. So this is my minor inducement, and this is my major inducement. So if this major inducement should be taken out now, I will expect to see the market tap in this order block, similar to what I have in the H1 time frame, and I will buy on this level to continue the move to the upside. So this is what I have. This is what I will expect to see going into next week. I'll be targeting at first 1 to 2, which is my specific target. I don't break that rule. It's very important to me. And then the overall target is going to be on the H4 time frame. Overall target should be the H4 time frame. So this is what my next week trading should look like. So that is it. This will come to the end of this video. Everything on gold is still looking bullish. Don't go against the flow. And also, to refine this order block here, this is the major order block which is holding imbalance. Why am I saying that? If you look here, this move here all happened inside this bearish momentum candle before this strong bullish candle engulfed it. So this is my main order block. So immediately this inducement is being taken out, don't hesitate to buy at this level. Trading is reactive and not predictive. Just take the risk and see what happens. For me, that's exactly what I'm going to be doing. So when the market open, I'll wait for this inducement to be taken out. Once this is taken out, or maybe we have another inducement being created. But for now, this is what I'm looking at. Inducement taken out, order block filling the imbalance, and I'll be buying at this level. Continuation to the upside. As simple as that. So that is it. With this, we come to the end of this video and this top-down analysis breakdown. So let's go into next week and see what it's going to give us. I wish you successful trading. Yeah. See you guys in another one. And don't forget to smash the subscription button, subscribe, and turn on the notification button. Don't forget to like and share the video for more updates like this. See you in another one. Peace out. Happy trading.